This is another episode of me documenting the day-to-day process that I'm taking to achieve long-term consistency in the financial market. This is my first day trading back after taking basically the entire week off last week. If we toggle on the Express Funded account, we'll see that the last trading day that I had, $421 in drawdown on a Monday with no news driver, a day that I don't trade at all. And that has brought me to the point of basically blowing up. I only have $200 left of available drawdown before I blow the Express Funded account and have to restart the entire process over again. So now that I am back and I have my setup, I'm taking this time to just focus in on trading, get a feel for the market before I even do attempt to trade live again. So today's demo trading, 3 trades, basically break even. Let's get into it. View my day. So I literally just hopped on the market at 9:15 this morning, and I thought I'm just going to run through the motions, get myself used to going through the process again, get acclimated to trading again, because I took basically the entire week off last week. So nothing crazy today, just trying to get a feel for the market. What I was looking for today was lower prices. Of course, I still have that sell bias that I come to the market every single trading day and I'm looking for lower prices, and the market just does not go lower. And what we've had recently is the market just keeps going higher. So again, still have to find my way of getting a feel for this market, because all I've been doing for the month of November is fading it every single fucking day. Although for the most part we were going lower, right? But things have changed now in the near term. The condition is now bullish. It's no longer bearish. We're going higher. So today, going into today, I'll explain to you what I was looking for. Price has gone up for some time, literally making 0 cents, leaving a lot of low resistance sell side behind, and it's still respecting the daily CIBI. So one thing I've noticed about me is that I really have a heavy bearish bias. I love leaning bearish. The downside just makes a lot more sense to me, because we have these up moves. They're really slow and they're really grindy, and they don't really make a lot of sense to me. Like, for example, here in this morning session, this is on Wednesday, we'd never drop down and take, well, we don't have to, but we leave these relative equal lows blind, and we just keep grinding higher, right? I don't like this condition. This condition it's not optimal for the way that I trade at all. It just does not make sense to me and the way that I see the market. And the fact that we've done this here today too, and we just keep going higher, still doesn't make sense to me. So I have that bearish bias that I keep leaning into, and that is definitely what got me killed over the month of November. But what I saw was how the market traded around PDR right from the Asia session. It's aggressive, and I believe it'll set up a retracement today. I like how we're opening off of relative equal lows and sitting down inside the daily BISI. So what I was seeing going into today, well, I noticed that the first thing that we see from the Asia session is that we have a run on the previous daily high, and then boom, smacked it the other direction. And then what that looks like on the 4-hour is what looks like a bearish order block, right? The formation of a bearish order block. We have this huge, large down candle. This is previous day high. The first thing we do is open, take it, boom, trade the other direction. On the hourly, we kind of see the same thing. So I'm thinking, okay, we have this consolidation range. We have this gap up here. Trade up, close on a high, open, immediately take that high, and then slam it the other direction. Huge CIBI. And then we have relative equal lows below. So what I wanted to see today was the market trade up, reject the gap, and then trade lower. But of course, first thing that I was looking for was being a seller potentially early into the open at 9:30 sell. Like, that I always fall for, that I'm always trying to look for. Because it does work when it's there, but it's rarely ever there. And that's my issue. I keep trying to press the best playbook that I have on today's where it's not there, and that is the reason for the losses that I have today. Let's put on executions. First, I have to log into paper trading, don't I? Okay, cool. So here's the executions today. We have 3 trades in total, 1 win, 2 losses. First trade, as you know from my plan, right? I'm looking for a sell potentially early into the open because of price. What has price done so far? Now, what I mean by that is on the 15-minute time frame, we have this really large down candle going into the open. So I'm thinking, okay, if the market is to go lower at the open, my bearish bias is correct, I'm not thinking we're going to overlap this candle's range at all. I'm thinking we're just going to stay heavy and drop for the relative equal lows below. That would be best case scenario. In that case, the market does not seek to rebalance the large gap that we have here, which in this case, it does make sense for it to do that because it literally left relative equal lows, relative equal highs right below that. So there's a strong reason for the market to want to draw back up into that. So the 9:30 sell is not really something I should be looking for today. Of course, I try it, and of course, it does not work out. And then Because that did not work out, I know that the market didn't break lower at 9:30, and the range of the 9:15 candles now overlaps. So this idea is not going to play out until later in the AM session, if it does at all. So I want to wait for the 10 o'clock driver to come out. 25,342 buy side is in the crosshairs now before a real move. So I'm telling myself, okay, because that did not work out, then it is very likely that we see the market run out this buy side before we see any kind of down move, which was the case. We had a retracement, right? But it wasn't a completely full out reversal. We just keep trading higher. So what led me to take the second trade was we have a run on this high here. Change in the state delivery, very aggressive. At this point in time, I'm telling myself I'm not going to look to be a seller until this buy side just ran out. But because of this displacement was so strong, and I'm bearish on the day, I viewed this as a potential sell. We have this discount wick here on a run below that candle's low. I told myself if this gets overlapped, the market can close below this on a closing basis with a large down candle, just as it did here, then I would expect it to find some resistance in this wick right here. But we never do that. I sell here and I get stopped out on literally the following candle. I'm literally selling at the low of the morning session. So I think what I'm going to do, what I'm going to be working on for the next couple of weeks is I'm going to be making an indicator that tells you whenever I take a position to do the opposite. So you can literally buy the low a day because I'm looking to be a seller down there. What do you think? Let me know. I could actually make that happen, right? My win rate is extremely low. I'm getting the bias wrong just about every single trading day. So I'm thinking about making an indicator that does the opposite of what I do. And that would be profitable. What do you think? I'm just fucking with you, but the third trade is finally when we do engage that buy side, right? And at this point in time, I'm looking at the hourly time frame. We have that 10 o'clock driver that finally comes out. I'm looking at how the 10 o'clock candle closed. I note that we have a change in the state delivery, bullish, right? This is not looking good for the sell. So if there is to be a sell, then I need to see the market run above this candle's high because we closed near the high on this range, right? The following is going to open up near this candle's high. I want to see it immediately take that high and then fail. And I want the 10 o'clock candle to be a large down candle. Obviously, that didn't happen. Obviously, we just keep trading higher. But that's what I was looking for. So the first thing that we see at 10 o'clock, that driver comes out here. We open. We take the previous hourly candle's high, and then we fail. And as soon as we get a change in state delivery here, and I sell that. And then we just hang around. I note there's literally no premium sensitivity. The market's not giving me any feedback that tells me it wants to go lower. So I move my stop loss, which is also something that I should never do. All around today is not how I want to trade at all. Like this tells me that I'm definitely not ready to trade live again. I'll probably be in demo the entire remainder of this week just to get a feel for the market, get in sync with what we're doing with this condition, and adapt to that. But I give this trade a little bit more room to work because I know how we fall into this consolidation. It's not showing me any willingness to break lower here. So I know that it's likely to make a higher high here. But what I've seen before, when the market falls into consolidation like this, sometimes we literally just roll over and we have a complete full-out blown reversal. Other times it leads to retracement like this, where we barely take out these highs here, right? High here, barely poke that out, and the high here again, barely poke that out, and then we see retracement. But notice how the retracement is extremely high resistance. What I mean by that is each candle's range overlaps the previous. We see a lot of back and forth. It's a really slow condition. So this tells me the market is literally just having a retracement to rebalance this, then see continuation. But I don't need it to be a full-out blown reversal for me to make money. And this is what I'm realizing is I would be a profitable trader right now if I literally just took profit. That's it. But I'm always going for these huge swings. And the fact that I'm in drawdown on the Express funded account, my first funded account, I'm always trying to aim for these huge trades that would literally erase all the drawdown in like one single trade, when all I need is these small consistent moves. So although my bias is literally incorrect today, I'm still able to capitalize on a retracement because I know what the market's likely to do. At this point in time, it's later in the morning session. I have a good read on price. I have a good read of what we're doing for the day. Even though my bias is wrong, I can still capitalize on the downside because I'm noting this condition. I'm noting this type of behavior. I know what that typically leads to. Typically leads to retracement. So all I'm going to do is frame the dealing range and just look for half of the range. That's it. And I don't need anything more than that. And that's how I'm able to recover my intraday drawdown, just by looking for half of the range. That's it. So I'm recognizing the condition here. looking at the shallow pokes, give it a little bit more room to work, starts moving in my favor. I'm literally just going to take off at half the range. We have this swing low here, these obvious gaps here, and drops right down into that, rebounds that, and then continuation. This is not real. I know this shit's not real because of how high resistance it is. If this was a real move, then we'd see fluid, liquid price action like this that creates inefficiencies, but we don't see that. It's just a slow, choppy grind lower. I know that shit's not the real move. Now compare that to the upside, right? We have this fluid, obvious gaps, and this fluid, obvious gaps. And these are the real moves today. We're going higher today. We're not going lower. So although the bias is incorrect, if I just aim for a low-hanging fruit, half the fucking range, then I can walk away with the drawdown that I've incurred earlier in the session recovered. Another thing about today is that I've taken way too many losing trades before we have drivers that come out. So let's see. Let's go to here. We have a red folder today at 10 o'clock, and I've taken 2 losses before that even comes out. And the real move of the day comes when? After. Well, the real move started here, but we get a rebalance of that after the 10 o'clock driver comes out. And there's even an opportunity to buy the market in here. Reversion, fair value gap, change in the state of delivery, order block. Like so many different ways you can get on side with this trade here. And it all comes after the 10 o'clock driver. So that has to be a new rule of mine because there's been way too many sessions where I'm literally taking 2 losing trades before the 10 o'clock driver even comes out. And I'm tired of it. I'm sick of it. There's a lot of mistakes that I keep repeating. So it's going to be a lot of reflection that I have to do in this coming week to figure out where I'm at right now, what my playbooks are looking like, where I continuously go wrong, which would be a day like today where I'm just always looking for lower prices, even though this is what the daily chart looks like. I gotta take these off because it's getting messy. This is just something that I struggle with. I'm always looking for lower prices, even though we have a new daily BISI, a new daily bullish fair value gap. I'm still looking at the left side of the price and saying, oh yeah, look, we closed right there, and just ignoring the fact that we have 1, 2, 3, 4, 5, 6, now going to be 7 up days in a row. Because we've traded lower does not mean we have a full out reversal and now we're going lower. Now we've turned the corner. This is literally a fake move and we're just overlapping that. So we just keep going higher, and that's the condition that we're falling into right now. Just keep going higher. And we could even work to a new all-time high. So have to adjust that, have to adapt that, make the change. Whenever we have a gap down opening, look for it to fill and get closed. Whenever we have a gap up opening, look for it to stay open and look for continuation, because that is the condition we're in. The thing is when the market was going lower, that's when I'm trading well because I'm more comfortable with the downside. I love when the market gaps lower and it continues down. I love when we gap up and then we reverse and fill that gap. I love that shit. The upside, I struggle a lot. So that's what I got to work on. But yeah, anyways, I'm back and just paper trading for the rest of the week. Don't think there's anything else to really talk about. The lessons I learned today: 10 o'clock drivers, can't be trading before 10 o'clock. And then I can make money even if I'm absolutely incorrect about bias just by going for small targets. That's it. I mean, I've had way too many trading days on the express funded account that should have been winning days. This literally should have been a $300 profit day. I can just point that out on the top of my head. So many break-even trades. I've been up over $300 in profit, and I literally just don't take fucking profit, and it comes back on me and stops me out for break-even. So that's good. That's going to be it for this one. Talk to you guys tomorrow with more demo trading. So it's going to be boring for the next couple of weeks until I feel comfortable to actually do this shit again. But I'm also kind of fed up with day trading. Like, what if this really doesn't fit my personality? What if I'm more of a swing trader, like long-term trader, like higher time frame, hour plus, you know? So still trying to find my way, but I know that so long as I continue to put effort, put action into this day in, day out, well, eventually I'm going to arrive, and that's it. So talk to you guys tomorrow.